You know just what I'm talking about. Come on, baby. Just what I'm talking about, baby. Come on, yeah, baby. Go ahead and lie. Come on, baby. I want to lie. All right, welcome everyone. Good afternoon. Thank you so much for coming in and be here on time. Good afternoon. Welcome to ALECA Talk Series number 9. My name is Asa, and I'll be your moderator for today. First of all, I think while waiting for the rest to come in, we have a few people coming in. So thank you for joining us today. We're gonna have a very casual sharing discussion with Mr. Graeme, our speaker for today, on the topic of can Bitcoin be sustainable? Okay, so we will wait for a few more minutes to let the rest of the participants to come in. And meanwhile, before I start the session, I think we have more people coming in. Can you guys see my slide? Just give a thumbs up.
Yes,
all right. Okay, thank you guys. So we will have a quick poll while I run through the opening slides with you guys. There will be the icon on your bottom right, which is on the triangle and the square icon. Just click on that and there will be 4 questions, if I'm not mistaken, 4 questions on that, and then just just vote on your answer, and then we can read through while we run through the session. Okay, so we have 24 people today. Thank you so much. It's amazing. It has been 9 series of ALECA Talks, and like I said, please click on the icon on the bottom right. I'm going to launch the poll in a few seconds before we start. So let me just share briefly with you guys on ALECA Talks, basically brief introduction on what is ALECA Talks. It's actually a platform for leaders of a sustainable future. In short, in summary, it's basically more like an informal sharing discussion, a platform to engage with the key individuals in industries, talking about sustainability, talking about the relevant topic in the industry. So we all can ask questions, and to those people who are more experienced, who have so much thing that they can share with us on their insights, their thoughts. So really, it's more a casual, informal webinar series. Thank you again for joining us. We get a lot of new ideas, new perspectives from our previous speaker as well. And if you like to be our future speakers, definitely we're gonna run this forever. So if you guys would like to share your ideas, your thoughts, you guys wanna share about, anything that is relevant in the topic in the industry, please, you guys can contact any of us in the team and just, share with us you guys wanna share your presentation slides, and then we can set a date and a time for our future ALECA Talks, all right? We can do for August as well and month after that. So yeah, do contact any of us in the team. Okay, we have people already, we have 29 coming in. And all right, I'm gonna launch the poll right now. Let me just give me a second. Okay. So guys, if you can see on the bottom right, you guys can just click on the icon and there will be 4 questions on that. Please place your vote, and I'm gonna read out the answer while we're running on the session, all right? So it's already 2-3, we have more people coming in. Thank you everyone, this is our 9th series. We're gonna have our speaker talking about Bitcoin today. And do drop your questions and any kind of comments in the chat box below. Thank you. We have more people. Please put in your votes. We have 31 people coming in. And brief introduction. If you guys want to know more about ALECA, do visit our website. We have our LinkedIn profile. We have our YouTube channel. Soon, maybe we're going to have podcasts or anything talking about, relevant topics and having you guys engage with us as well. Yes, make that vote, guys, coming in. Okay, the first question is, why are you guys joining today? Is it because of our speaker today? Maybe. And our second question is, are you investing in Bitcoin? Sorry, I'm about to launch it. Let me launch everything. Hold on. Okay, so I have launched all the questions. Let me get into the slides, if you can see the slides. And I'm going to read, while I go through the session, do drop your votes as well while we run. Okay, so first thing first, disclaimer here, if you can see, ALECA's number is not liable for any presentation material shared, nor the opinions of the presenter or attendees. So please enter at your own risk, okay? And do mute your speaker as well and turn on your camera if you like, because we would like to see your faces with a smile if we can. Everyone's working at home today. All right, mute your speaker, drop your questions in the chat box, turn on your camera, and please be respectful to the presentation, to the presenter as well, and on your questions, okay? So let's get to the first slide. We have our Mr. Graeme. He's the Director of Engineering in ALECA, right? First of all, thank you for having, thank you for accepting the invitation to be our speaker for the 9th series. He presently is a ALECA Sinamrahat Director of Engineering and also working as a freelance consultant for multiple companies across the oil and gas industry. 32 years of experience in petroleum engineering and production technology in both E&P and service companies across the globe in operations and projects. He consistently delivers highly technical results by combining his passion in petroleum engineering with his software skills. I would like to add a little bit more. He have a good sense of humor, knowing Mr. Graeme, and he also have worked across many countries such as Brunei, Alaska, Australia, Mexico, UK, on a various long and short-term assignments, including new technologies, applications in well engineering designs, integrated operations management, field development, planning, and so many more. So he's a positive man with a lot of sense of humor. His experience and knowledge has tremendously supported the team, especially on the technical side, that is already available in our system. Okay, let me get to this next slide. All right, so shall we? We have 22 people. Every one of you guys have done putting your votes. Say yes, raise up your hand. Okay, hold on. Thank you, Andy. Andy has raised his hand. Let me get this. Hold on, yeah. All right, so I'm gonna read out to you guys why are you joining today's session. We have 6 votes that says I want to learn more on Bitcoin, and there is 0 votes on I want to be a Bitcoin investor. And the third one, I'm curious about cryptocurrency, 8 votes, and also 3 votes on curious about carbon footprint. Okay, I'm gonna show you guys everyone on the results. Can you see? Can everyone see the results?
Nope.
Yes, sorry guys, this is my first time doing poll, so let me know if you guys can see the poll.
No.
No?
No either.
Okay, I need some, hold on, yeah.
If you open the polls, you can see, if you go back to polls, you can see who voted. It's okay, go back to the poll and open them up again and you can see.
I'm already opening the poll, so let me just read it through, yeah? Okay, so our second poll, our second question is, are you investing in Bitcoin, guys? So we have 2 votes saying yes, and we have 10 votes saying no. And soon we have 2 votes on planning to invest in Bitcoin. The third question is, do you think Bitcoin is sustainable? 1 vote for yes, 8 votes for no, and 6 votes for 50-50. So it's a good topic to run today. The last question will be, do you think Bitcoin is a bubble? 13 votes for yes and 3 votes for no. And our last one, if you think it's bubble, when do you think it will burst? 1 vote for within 6 months, within 1 year, 11 votes, and never, we have 5 votes in that. Thank you everyone for participating in the polls. Thank you so much. So let's get to our first slide. I'm gonna stop sharing. Mr. Graeme, the floor is yours. I'll stop sharing already.
Okay, can you hear me? Can everybody hear me okay?
Yes.
Yes.
Very
Okay,
clear.
am I starting to share?
Yes.
Okay, can you see everything okay?
Yes.
Okay, well, first of all, thank you to everyone that's taking the time to join us today. I hope you'll enjoy the talk, and I hope it generates a few questions. I've tried to make it fairly general, but there's probably some terms in there that will come off a bit techie. Don't be put off by that. IT people love their acronyms, and you don't need to remember them, and the processes are fairly simple. So we're going to talk about sustainability. If I can get my okay. Okay, so we're going to talk about sustainability, and in order to do that, we need to sort of think about what is sustainability. There's two aspects to Bitcoin when you're addressing the issue of sustainability, and the first one is, does Bitcoin actually have any real value? Now, when I say that, I mean, does it have any real intrinsic value such that it justifies its existence? Now, and the second question is the process itself sustainable? Yeah. Now, I don't intend to dwell too long on the first one because it's more of a philosophical question. I'm sure there's a lot of people out there are wondering around what actually gives Bitcoin value. Why is it more valuable than another coin? It's the same algorithms, the same processes. So it's an important question, but it's not really one that we can really answer here. We can maybe talk about it a little bit more in the discussion later. But the second point is the one that I'd like to really concentrate on. Is the process of Bitcoin actually sustainable? Yeah, and when I talk about that in the context of sort of the UN sustainability goals, etc., you might want to think as we go through this, like think of it as like buying a car, buying a Jaguar or a BMW. You've got this nice fancy car, but it sits in the garage. Yeah, do you have because you don't have enough money for the petrol? So basically, you've got this lovely car, but you can't afford to run it. And I guess the question I'm putting out there is, can society afford to put petrol in the Bitcoin tank any longer? Yeah. So the first thing, in order to question sustainability, you have to have at least a brief understanding of what the Bitcoin process is actually about. Most people will be familiar with the name, but not necessarily are too many people familiar exactly what it is and what it does. Bitcoin is basically a decentralized currency, and what that means is it's not supported by any government or any bank or any securities or gold value in any sense at all. It's supported by the people on the network. It's completely independent, and because there's a fixed number, it's not like a government that can just print some more money. You can think of it as a very large ledger in which all of the Bitcoin transactions that have ever been done are put into this ledger, and basically all of the transactions are verified by everybody else that's on the network. Yeah. In order to build the blockchain, you need first somebody that has Bitcoin in their wallet, and they send that to somebody else. Yeah. So they notify that person that they're sending the money, and that person also generates an address to receive that money. Yeah. Then this notification then goes out to the nodes, to the public nodes on the network. And then a verification process starts, yeah, in which the point of that is basically just to check that the person actually has that much Bitcoins in their wallet, that they can afford to spend it. So once that's actually been verified, it goes into what's termed a memory pool. It's basically every transaction just gets dumped into this memory pool. And from there, the miners, which are the important part of the process, the miners then grab a whole series of those transactions, they bring them into their process, and they perform what's called a proof of work to authenticate the block. Yeah, all of those transactions. Once they've authenticated the block, they send the block back into the network, and basically everybody that's on the network then verifies that they have done the proof of work and that the block is actually good. From that point, the Bitcoin is then sent to the person that's actually receiving the Bitcoins, and they can open those Bitcoins in their wallet using a private key that only they know. So the key point here is that the system really relies on the miners, and that's the area that I'd really like to concentrate on. Yeah, because it's the proof of work that a lot of people, or most people, actually see as what adds value to Bitcoin. the main part of that proof, the main reason I've displayed that equation previously as 1 + 1 = 2 is because there's a very large perception out there that Bitcoin miners are essentially, how to put it, solving a very complex mathematical equation in order to verify the transactions. And this is actually not true. It's a myth. And it's important to understand that in order to appreciate the mining process. So if we look at what is actually happening within the Bitcoin mining process, you can see that in terms of the transactions, it's a very simple ledger process. It's just from one address to another address. The Coinbase transaction that's above it, that's quite important because that's how the miner actually gets paid. He puts his own address in there and he awards himself, it's currently 6.25 Bitcoin, but that halves every 4 years. So he puts that into the Coinbase transaction. And then what he does is he puts that through something that's called a hashing process. And that hashing process is it's a cryptographic algorithm. Now you don't need to actually understand exactly what happens there, but he creates what's known as a Merkle root hash. And again, that's another fancy acronym word that the techie guys have made up. It's just a word. In order to understand the hashing process or the SHA-256, what you need to look at is if you take an input, any input that goes in will create a 64-character output. That's it. So if I put in any input that I give it in either text or numbers, it will produce a 64-character output. And this is one of the key properties of that hashing process. Every output is 64 characters, regardless of the original length that goes in, and every output is unique. No two dissimilar inputs can ever produce the same output. So now we come to the Merkle root hash. This is just a fancy name for all of the transactions. So if they take the transactions from the memory pool, they compress it into an archive file, and then they feed it through the hashing process, which we've seen, and then the outcome is basically the Merkle root hash, which, this is an example. It comes out like that. And it looks all very complex and very techy and everything, but it's actually a very simple process. And in fact, that cryptographic encryption is actually used widely across the world in various messaging things like WhatsApp, etc. So it's a very easy process to use, and there's nothing particularly fancy about it. So what happens now? You have your Merkle root hash, and then what the miner does, this is the key part of the process. The miner takes that Merkle root hash and he adds a random number to it. And then he rehashes it. And from that, he gets another 64-bit character output. Now, the key to this is, that he's trying to create an output that has a 0 in the front. In actual fact, with the current difficulty level that's in Bitcoin, he's actually trying to create a number, a character, 64-bit character that has 17 zeros at the front. Now, in order to do that, he will try a random number. In this case, I gave an example, just to make 1 0. But in actual fact, the miner will have to keep doing this time and time and time again. He will go through this millions of times in a second, basically, to try and find that random number. The random number is referred to as a nonce. You might hear that term somewhere around the way. It's not special, and again, it's another techie expression. It means a number used only once. But it's a random number. That's the key to this process, yeah? So what you can see here is the miner is not actually performing any real complex process. He's simply generating a random number, which he then tries. It doesn't work. He goes back and he makes another random number. So, one of the nice things about this process, yeah, is that although it's hard and it takes a long time for the miner to find that number, and it's usually set by the difficulty level, which is currently about 10 minutes to do a block, then although it's difficult to find that number, or rather it takes a certain amount of time, yeah, it's actually quite easy to verify the process. The process itself, yeah, once the block goes out to the network, yeah, all the network or people or nodes on the network have to do is take the Merkle root hash, take the nonce, put them together through the hashing process, and if it meets the difficulty level, then it's a valid block, and the block is authenticated. So it's very easy to authenticate the proof of work. It may be energy intensive in order to create the block, but it's actually very simple and very quick to authenticate the block. So before we discuss the implications of all this, I'd like you to think of this now as it's actually a lottery, yeah? And the purpose of that lottery, yeah, is basically to create new blocks on the blockchain without the permission of anybody else. Remember, it's a consensus currency, yeah? And the other thing is to fairly distribute the 21 million coin supply, yeah? In this process, the miners get rewarded basically for the electricity, for the energy they've expended in verifying the block, yeah? Now, when we think of this as a lottery, yeah, you can think of it as going to the casino, yeah? And in the casino, all of the players have 1,000-sided dice, yeah? And the point of the game is you throw the dice as many times as you can, as fast as you can, but you have to get a number that is less than 10, for example, yeah? And you keep throwing the dice. And that's basically what miners do. They keep throwing the dice. Now, when somebody gets the number less than 10, they win the prize and the game starts again. And that's basically what it is. Now, if you follow all of that, you're probably a bit of an expert on Bitcoin now, because that's essentially what it is. So now we have the basics, yeah, of what this all means. We can start to ask the question, is it sustainable? Yeah, is it sustainable? Well, what are the things that stop it from being sustainable? Yeah, well, the first thing is that the block size is limited. Yeah, it's currently limited. Yeah, and there's only one block produced every 10 minutes. These restrictions, essentially, this restricts the number of transactions that can be done in any given period of time. So it limits how long it takes to actually verify a Bitcoin transaction. And even though one block is done every 10 minutes, because of the way the system works, you really need to have at least sort of like 5 or 6 blocks above before it's really fixed in the blockchain and it can't be changed. So the other aspect is the one we're really concerned about and we're here to talk about, is the amount of electricity that's used in order to do that process. Yeah. Now, we can look at sustainability in that context against things like the UN Sustainability Development Goals. We can look at how Bitcoin does or does not comply with any of those. And the ones that we really want to think about when we look at that, when we look at what goals might actually be applicable to to the Bitcoin process itself. There's things like affordable and clean energy, there's responsible consumption, and there's climate action. Yeah. Basically, Bitcoin is in kind of contravention of all of these goals. Yeah. Now, in order to see exactly why it's doing this, yeah, we have to look a little bit deeper into what exactly the miners are doing. And this piece of equipment is pretty much generic in the industry. This is what's called an Asic Miner, yeah? And again, this is another acronym, yeah? And there's nothing fancy in here. It's an application-specific integrated circuit, yeah? So the point of that miner, yeah, is basically to take all of the block transactions, hash it, add a random number, and basically try to achieve an output that has lots of zeros in front of it. That's basically it. Now, if we think about what the power consumption associated with that is, we can see that on average, an Antminer system basically draws about 1,500 watts. Most miners will run these systems 24 hours a day. And basically that gives us 36 kilowatt hours in any 1 year. Yeah. And to give you some sense of, as a comparison in terms of what that means, it's similar to us running an aircon unit 24/7 all year round. Yeah. Which in itself doesn't sound like a lot. Yeah. But when you take that in the context of nobody who's serious about mining ever runs one unit, they run multiple units, and these are generally called farms. And this picture here will give you some sense, yeah, of what a farm actually looks like. This is a crypto mining farm in Russia, and it doesn't take much imagination to get some idea of their electricity bill. It's huge. It's huge. So how can we think of that then in terms of a footprint? Yeah, these are just a few numbers that were pulled together. Excuse me. That will give you some sense of what it has in terms of a carbon footprint, the electrical energy, the electronic waste that it generates, and you can see those compared to small countries, yeah, in terms of their energy consumption and their footprint. Now, if you look at a single Bitcoin transaction, it basically, again, it's very highly intensive in terms of its energy consumption and a carbon footprint. When you compare it as even just a single Bitcoin, yeah, it takes about 60 days of a US average household consumption to make one Bitcoin. Another way to look at this is to think, if you think of Bitcoin as a store of value, as many people do, you can, and you want to compare it to gold, yeah, then we can think of it, one Bitcoin, yeah, or the value of one Bitcoin, it would generate, in terms of gold mining, would create 14 tons of CO2. But in terms of a Bitcoin mining, one Bitcoin creates 188 tons. That's a factor of about 13 or 14 times more CO2 than mining for gold does. Yeah. So if you want to think sustainably, you would mine gold rather than mine Bitcoin, obviously. So I want to just put out one final analogy to you. Yeah, I used the one of the casino and the lottery, and it is a lottery. Let's not fool ourselves on this one, yeah? But people like to gamble. It's not a bad thing necessarily for people to gamble. But what they're actually doing here is not really so much of a gamble per se. It's, the best analogy is if you think of it as a house building exercise, yeah? If you think of a group of people and they're in a race to build a house, yeah, they race, they get all their materials and their energy and all the rest of it, and they build a house, and you get a winner. Somebody wins. Yeah, that's great. That's fantastic. They've got a house. But the reality is, everybody else loses their house. So they've tried to build this house, but they just weren't quick enough, and then everything else falls down. Only one block is ever verified, whereas everybody in the chain is trying to build a block. So they're all using electricity. So then the next question we have to ask ourselves is, can it be fixed? Can we solve this problem in terms of the sustainability of the Bitcoin itself? Well, there's a few ideas that are out there in the community in terms of what can be done. You can increase the block size and you can reduce the block times. There solutions or possible solutions that are definitely being considered within the community. The other aspect in terms of the energy consumption, though, is possibly a switch to proof of stake rather than proof of work. And that's something that Ethereum is looking at in terms of the moving to Ethereum 2. But all of these things have an issue in the sense that everything that's current about Bitcoin is the thing that is actually contributing to its value, or at least it's perceived to contribute to its value. Once you start messing with any of these aspects, there's always the possibility that the price or the value of Bitcoin is perceived to be low and it goes crashing. Yeah. So, and if you move from a proof of stake to a proof of work, what happens to all the mining equipment that's out there in the world now? What do the miners do with all of that equipment? Well, they move it over to something else like Bitcash. They start mining Bitcash or something of that nature. So all you've really done is shift the problem to somewhere else at the same time as you've crashed the value of Bitcoin. So I don't believe that Bitcoin as it stands is sustainable, but I have difficulty in seeing how you switch it to a sustainable model without reducing the value in the system. And that's basically my my presentation there.
Okay.
And I'm hoping we've got some questions. I hope I didn't run
Yeah,
through
we
that.
do.
I hope I didn't run through that too quickly that people weren't taking it on board. I'm afraid that my screen was a little bit taking me over, and I couldn't really see people's reactions. So.
Yeah, okay. So we have one question here, Graeme, from Mr. Ziad. He's asking, how can we value Bitcoin if there is no real value?
That's as I say, that's a very philosophical question. It's you could argue that something's worth what people are willing to pay for it. So possibly if you're willing to pay 34,000 for a Bitcoin, then you could argue it has a value of $34,000. Are you prepared to? Is everybody in the world basically prepared to pay the societal costs of Bitcoin? Yeah, and I think that's really the bigger question. You can't stop people from mining. In a democracy, people are allowed to spend their money on what they want to spend it on. And if people choose to spend it on Bitcoin, then who are we to dictate to them that they can't? But as a society, I think we have to start thinking about how we make them pay for the societal cost of that energy. Yeah, is it with a carbon tax, as we've discussed before in a previous ALECA talk? Is it about do you tax them in some form on the Bitcoin? Again, very hard to do. But I really don't have an answer for that. I don't believe that Bitcoin in itself has any intrinsic value. But having said that, blockchain does. There is very definitely some uses for the blockchain technology and the processes that are in there to encrypt and to keep data secure. So the processes themselves have value, definitely. Whether just Bitcoin in itself has, I would argue, why would Bitcash not have the same value as Bitcoin? It's exactly the same algorithm. It was produced from a fork from Bitcoin. It's exactly the same. So why doesn't it have exactly the same value? Because people want to pay more for Bitcoin. Go figure.
Okay, I hope that answers your question, Mr. Ziad. And he got another question here. I think most of us wanna ask you as well. Why does people are buying Bitcoin if there has so many problems in it? For example, no stabilizing force, factor to the monetary systems and national currencies. So yeah, why people?
Well, I guess there's a couple of reasons why people are buying Bitcoin or people have Bitcoin. There's the obvious criminal activity associated with that. There's a lot of people that are they can use Bitcoin as a way to transfer money without having oversight on it. So it's definitely, and in fact, its original usage was primarily criminal in that sense. Yeah. There's a lot of people buying Bitcoin purely speculatively. I mean, if you look at how much Bitcoin has increased over the last couple of years, even though it took a crash a couple of months back or a month or so back when the Chinese decided to clamp down on the mining process, it's still sitting at $34,000 a Bitcoin. So because it's so volatile, it's actually quite it's a good way to generate money if you know which way it's going to go, or you think you do. It's just a very volatile market. But I would say it's speculative in that sense. It's very high risk, potentially high return, but very high risk.
Mm-hmm.
I'm sure the people that have bought at $63,000 a Bitcoin are crying a little bit now.
Yep. Okay, so Ms. So, he said he doesn't have any questions, but a request. Please buy during every dip.
Please buy what, sorry?
Please buy during every dip. This lady saw, yeah. He had no question, but a request.
Hi, so by the way. Yeah, buy low and sell high. Yes. And I think that's essentially how people are making money out of Bitcoin as a speculative financial instrument. They're basically buying low and selling high. And if you do that in the right way, then you can make money out of it. But at some point, you have to convert that back into fiat currency. You can't really spend Bitcoin. I know Tesla's talked about it, like, no, you can buy a car on it. But in terms of an everyday transaction, you can't just go into the shop and spend a part of a Bitcoin. Although theoretically you could, in reality, it's just not practical. Yeah, so in order to spend a Bitcoin, you have to realize the value by selling it. Yeah, and you have to sell that at the right time in order to make your money back.
All right, that's a good explanation by by Graeme. And Serge, what are the majority of the transaction? Who is paying who with Bitcoin?
Who has the majority? I still think there's a large element, criminal element involved in Bitcoin. Not so much nowadays, because a lot of them have sort of switched a little bit to coins like the Monero, which is much more private. You can actually track some information through Bitcoin. So the criminal element tend not to use Bitcoin as much nowadays. But I think a lot of people are just looking at it. Financial institutions are looking to invest in it, and they are big holders of Bitcoin. I think the place that you see a real increase in Bitcoin value, or where you see those spikes come, is where you see places in the world where their fiat currency is letting them down. You saw a big spike when Zimbabwe went through, for instance, like when Greece's currency got devalued. People can look to Bitcoin as a way to try and preserve their savings. And it may actually have some value in that sense. But again, it's highly speculative.
Okay. Sharif, this is a very good question. Could Bitcoin be sustainable if electricity became predominantly derived of renewable and sustainable non-fossil fuel sources like nuclear, solar, etc.?
That's an interesting question. I think primarily, certainly up until recently, when everything was, most of the Bitcoin farming was based out of China, and most of their energy that was being supplied there was coal-fired, so it had a very high CO2 footprint. You could argue that if a bit farm is using renewable energy like solar power or wind power, then in that sense its footprint is not so great, yeah, but it's still using that amount of energy. Now what you have to ask yourself is then, is that moral? Could that energy could be used for something better, for a better purpose for society? Yeah, it still has a cost. But then you could argue, again, it's up to people to buy what they want to buy. You can't dictate that to them. So if it became renewable, if it was all renewable, then you could argue that Bitcoin could be sustainable. But inevitably, most Bitcoin farms will go where the energy is cheapest. They won't necessarily stay around to pay the price for sustainable.
Okay, Arumani, I believe technology will be used. However, as using as an investment is not going to help in the long run. That's his view. What's your opinion, Graeme?
That it's not going to be helpful.
Not going to be helpful.
I struggle with the long-term value of Bitcoin. I got in early, I was an early adopter, and I got out early as well, actually. Like, to be quite honest, quite frank, I got scared, actually, when I saw the price going up. I figured it had to be a bubble, and it had to burst. I think in some ways I wish I stayed in for a bit longer and made a bit more, but ultimately, the reasons why I got out are still valid to me. I still struggle with the basic underlying value of what Bitcoin is worth. You're basically paying for a lottery. If you're a gambler, go to the casino, buy a lottery ticket. You've got just as much chance. It just seems counterintuitive to me to be spending all of this money on a process that doesn't really generate any value for society, for the world in general. Yeah, it is personal. It is a personal opinion here. I think you'll find a lot of people that have different views, but for me, it just doesn't have the value that people seem to think it does.
So at the end of the day, it's more on personal preferences, personal individuals.
I think I would be more convinced about the value of Bitcoin if somebody could show me a good reason why Bitcoin is worth more than Bitcash, for example. Yeah, it's exactly the same coin built on exactly the same blockchain, just forked off from Bitcoin. Yeah, if somebody can give me a good and rational reason for why Bitcash is not the same price as Bitcoin, then I might be persuaded as to the value of Bitcoin. But until then, the 150 cryptocurrencies, thousands of cryptocurrencies that are out there, what makes them worthless while Bitcoin is worth 34,000? I don't have an answer.
Sharif, how does the electrical upkeep of Bitcoin compare to other cryptos and alternate coins such as ETH, ADA, and other coins?
I don't have exact numbers there, but what I would say is that obviously the value of Bitcoin generates the mining, and that is so the majority of the energy expenditure currently is being expended on Bitcoin because Bitcoin's value is much higher. Yeah. Now, when the hash rate gets really, really difficult, then a lot of miners switch to mining other coins. Yes, because it's cheaper to do. So it really depends on the relative value of any coin to Bitcoin at any time. It does change, and the miners do switch, but primarily it's around Bitcoin. Bitcoin is seen as the main generator of wealth, if you like, through mining. But that's not to say that the others don't do it. Any of the cryptocurrencies that are based on proof of work as opposed to proof of stake, those are the ones that are generating this issue around energy usage.
All right, I hope that answers your question, Sharif. I think we can, if you guys have any more questions, you can still drop in the chat box below, and we can also consult any of our team and Mr. Graeme himself on his LinkedIn profile if you guys want to ask further about this. So I think we can wrap up the session for today. Thank you, Graeme, amazing presentation. Oh, another one more. Not a question per se, but I'd like to hear your thoughts and opinions on Bitcoin and other cryptocurrency after digital currencies become more mainstream and accepted. So not a question per se, but
I don't think Bitcoin can become mainstream until it is stable, and you won't get stability until you resolve these issues. Yeah, if I saw Bitcoin staying at $34,000 for the around that number for the next 6 months to a year, I think, okay, now this actually might have some utility. Let's fix the other problems and let's maybe we can use it. I don't think we should ever forget the basic and in fact, it's what drew me to Bitcoin in the first place, the underlying principle of consensus bank financing, yeah, which is not dependent on a bank, which is not dependent on a government. That's actually very attractive. A lot of people, we don't like the idea that we suffer, we get the inflation when our government decides to just print some more money, yeah, and we end up paying more for everything, yeah. Why should governments have that power to dictate our lives and our financial situation? So don't misunderstand me when I say that Bitcoin doesn't have any value. It does have some value, but it's more philosophical than it is an actual practical value.
Okay, Amiro, I think this is a good question. This is just a theory. Say that someone managed to create an equation that determines the number that can be added to a given hash, making it the exact 64-bit 17-0 hash that is supposed to be. Number one, how would that change the industry?
Well, Bitcoin would crash. Yeah. I mean, I have looked at ways and possible ways of hacking the system. And it's not, I haven't found it personally. That's not to say it doesn't exist. But the amount of computer power that you would have to spend in order to crack the system, you would actually be cheaper mining. You might as well just use that energy in mining. Then the Bitcoin lottery is infinitely more winnable than the lottery of trying to crack Bitcoin. The problem with the random number generation is that the hashing process is not linear. So you can't just go 1, 2, 3, 4, 5, 6 in terms of your random number generation. It has to be truly random because the hashing process is random. It could just as easily be 25 billion as 1. Yeah, and there's no linear way to try and predict what that will be in terms of the outcome. So is there a way to do it? I've contemplated on that. I don't think so.
Okay, I think let's take the last one. What are your opinion, Graeme, on institution-based coins?
On the what, sorry?
What are your opinion on institution-based coins?
I think I don't really have an opinion per se. I mean, I think to me, they kind of do away with the whole premise of Bitcoin, which was the consensus. Yeah, it's why would an institution have a Bitcoin? Why don't they just have it's called a Visa card, isn't it? It's called an ATM card. Why would an institution have a Bitcoin? It doesn't make sense. You're then taking away that whole consensus, which is the only, I would contend, the only attraction of Bitcoin and cryptos is that it's not in the hands of an institution to verify the value of it. So if that's what attracts you, why would you then go and buy, a Bank of England cryptocurrency, El Salvador's digital currency? Why would you do that?
Okay, last one. Why would country like you said just now, El Salvador, adopt BTC, but other developed countries like US, China are afraid to adopt BTC?
I think that one of the main drivers for places like El Salvador, it's primarily around their inflation rates. They see it as a way, I think, to bring stability back into their currency. But I'm not sure that's actually true. I think there are a lot of risks in terms of adopting Bitcoin as a national currency, especially if you believe it's a bubble. Then potentially your entire government structure just collapses because Bitcoin collapses. To me that it's a very risky strategy for a government to take with its people's well-being.
All right, I hope that answered your questions. I think we can already recap the whole session. Thank you, Graeme. Just to recap on the whole Bitcoin today's session, I think like Graeme said just now, it's really not fixed, it's flexible. It also depends on your individual preference if you guys are looking to invest in Bitcoins or the other way around. But it's not going to be in mainstream. And to me personally, I wanted to invest. I did ask Graeme before that I wanted to invest because I want to learn more about how's the revenue and the profit will be like. But I think after listening to this, I have still a lot to do more readings on this. So let's share a bit more before we end this session. We're gonna have our next talk on the 22nd July with, let me just share with you guys first before we leave the session. We're gonna have with Dr. Mazlan. And one more thing, if you like to be any of our speaker in the next future events, do contact me. Do DM me and also contact with any of us on LinkedIn. We can actually discuss and set your time and the scheduled date. So our next talk will be on 22nd July, Thursdays, and the topic will be on geology and the law of the sea. So I guess this is a good topic for all those students in the geology courses. Please spread this around and share this poster with your colleagues that are interested to join. And please scan the QR code if you guys want to know more about ALECA and the existing 21 technical and commercial modules are already available on our system. Do book a demo with us and we can actually present to you how the functionality and the system works like for you guys. And we also provide free courses, free system for the students and lecturers in all universities. If you guys are looking for sustainable measurements to measure your carbon footprint, do contact ALECA. We will be able to help you guys in that. All right, so thank you again to everyone. We have about 36 people joining us. Thank you to Graeme.